Welcome to this video. In this video, I'm going to be doing a stock analysis of Wolfspeed. Now, as you can see, yesterday they rose by 1,726%, which is absolutely crazy. And in pre-market, they're even up by 16.5%. Now, what does Wolfspeed make? Well, they make silicon carbide power products, and the reason for this huge increase is they exit Chapter 11 bankruptcy and slash off 70% of their debt, which is absolutely phenomenal. But I'm going to get into that later. Now, something you should note about Wolfspeed is that the stock price has been quite a lot higher back in the day. If you make each candle a day instead of an hour, as you can see, it has been trading at 140 bucks. Currently, it is quite cheap if they can continue to operate better than it did before, and they won't fall into bankruptcy again, of course. As you can see, the price is previously trading at this bottom formation right here. As you can see, chances are if we increase above here, the next proper peak is going to be all the way up here, about 40 to 50 bucks. Absolutely insane, because that is almost 100% up from where we're trading currently. Now, it's going to hit this, of course, I don't know that, but it's very, very interesting. And we have earnings quite soon in 35 days. So if we have nice earnings there, well, chances are we are going to see that, which would be absolutely crazy for a company like this. Now, as I said, they have quite a lot of debt, and I'm going to show you right now. As you can see right here, they have $6.7 billion in debt. The market cap is usually a lot smaller, but of course the stock has risen so much, so it looks much bigger today than it was 3 days ago. Now, TradingView hasn't updated how much debt they have, but they are down to about $1.84 billion in debt, and they've also cut some of their interest off, which is quite nice. If you look at the way they make money, of course, as you can see, it is power product and material products, but it is silicon carbide, and it's used in basically everything. It is used in trains, cell phones, electric cars, basically everything. So I do like the company quite a lot. Something I also like about this company quite a lot is how many different countries they're in. As you can see, there are in a ton of countries. Often we see in these tech companies that are only in the United States, and sometimes a small portion that is in Europe. But currently, as you can see, they are quite big in the entire world, and especially Asia, where some of these products are made, which is very, very amazing to see. Now, something you should notice, the beta in this stock is absolutely insane. Look at this. This beta is 3.54, which means this stock is 354 times as volatile as the average index. So if you buy this, you should be very, very, very clever and know what you're doing, because you can easily hit a huge loss, because say it's not going to fall, let's say 80% tomorrow, and then it's going to be back down to about $5 a share. Of course, you don't want to see that at all happening. Now, the earnings, however, they have been quite nice. This is also one of the reasons why they exited Chapter 11 bankruptcy. As you can see, it has increased quite nicely. Now, they don't pay out any dividends, of course, because they don't make any real money, as you can see right here. Now, they are increasing their revenue slowly but surely, but their net income is still quite negative, and that is because they have to invest in their company for the production facilities, which allow them to make these silicon carbide chips. Now, if you look at the performance here, as you can see, let's just go down to the past 10 years. As you can see, it's quite up and down. As you can see, this year alone, just yesterday, it's performing like absolutely crazy. But before that, this year as well, we're down by 81%. So, of course, be very careful. As you can see, 2024 as well, down by 80%. So, as you can see, the past 4 years, 5 years actually, it has been quite a poor stock to own. So the risk to reward in this stock is very, very high. It still is quite high, in my opinion, even though it has risen 1,700%. Because the peak, as I showed you right before, is so much higher than its current stock price. If they can get back to this peak, it would be an insane margin you can get there. Now, the technical for the day is a strong buy, and for the month it is a neutral. That's because, of course, it has risen so fast. Of course, the technicals can't take that into consideration. Personally, I wouldn't buy it currently. I wouldn't see how does it act, because, of course, if we trade downwards again, of course, it's going to be quite poor. But I think it's going to trade sideways and bit up and down. It wouldn't surprise within the next month it's going to be between 15 to 16 bucks, or it's going to be about so, because I think it's going to fall back down to right around here. I think that the day is going to do like this. And the reason for that is I think some people who invest down here, they're going to take off profit. That's definitely happening. And I just think people are going to think, well, let's cool down a bit, because we've seen a rise recently in stock like Open Door, 8Co, and so on and so forth. And usually people take off some of their gains. Now, if you look at the analyst rating on this, they're quite poor, however. We have 1 hold and 2 strong sell. But that's, of course, also because they were in Chapter 11 bankruptcy. And usually you should never invest in a company that is in Chapter 11 bankruptcy. The EPS estimates, they're going to be positive in 2028. Hopefully we're going to see that, because that would be nice to see, because as you can see, it has been negative for quite a while. But the annual revenue, they're increasing that quite nicely as well, so hopefully they can execute on that. And if we see positive EPS, that's going to be absolutely amazing for this. Now, that was my stock analysis on Wolfspeed. If you like this analysis, please don't forget to leave a like and subscribe. If you want to see more videos like this, please leave the companies from analyze in the comment section below.